Hi traders and welcome to the Technical Analysis Market Watch on Friday the 1st of September. So I've seen some pretty good movement this week in a lot of the indices and the currencies, but it is non-farm payroll Friday and a lot of the key zones are actually being hit and really waiting for the news. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and it's been behaving itself in a manner of speaking because all the levels that we would expect it would touch have been touched, and it's stayed really within the realm of what we would hope. It's got a big doji candle over the 20 moving average and that roll reversal zone. Now look, this is a very important zone around that 65 cent mark because it proved to be good support through here, and we can see resistance all the way through this level here. Okay, so when we see that sort of price action, we would fully expect that it's going to be holding up and stopping price from going up when it does come and test it from below. So that's what we call a roll reversal zone. It had a big doji candle to attempt to break through, but of course the price action in that candle you can see ended up where it opened up. So the longs and the shorts all ended up at a place basically in the middle, and that so coincides with the roll reversal zone and the 20 moving average. So it really did hold it at bay for that particular period. Now, no real surprises, like I said in the intro, that when you see a non-farm payroll Friday like it is today, the markets are generally flat until that announcement comes out. As a rule, most of the time, you're not going to get a lot of movement, and the main currencies and indices do gravitate to these key zones prior to the news, because it is one of the biggest news announcements of the month. So, that said, it could do anything from here. We've got a double bottom, there's no question about that, but it's right at the neckline. And the reality is here, if it breaks this double bottom to the upside, I wouldn't be taking the aggressive entry on it. I would prefer to wait for the conservative entry, and that would be a break of this level and then a retest from above it and wait for the support. That's the more likely trade that's going to give us the best results, because if it does that, it's proven that we had the momentum enough to break through that roll reversal zone, but also look for that support and a turnaround in the smaller time frames to keep that momentum actually going in that direction. Good level though. I do like where it's at because I think it can do either very, very easily without much hindrance. It can go up and really create a zone up to around that 60 cent mark very easily, or it could turn around from here and actually get back down to that 63.80 in a heartbeat. That's the sort of zone that it's in, and both of them they're as likely as each other, and I don't have a bias either way. So happy with where it's at. But after non-farm payroll, that's going to be the important part that we need to look out for. If it breaks and closes above the 65.20, I would be looking for a small pullback to the 65 level and then look for trading it off there. But of course, if it starts to weaken from this point onwards, I'd be looking for shorting opportunities down to the 63.80 or 64 in the first instance and move with that momentum. So pretty good trading setups on the Aussie. The US dollar CAD has also been, very technical, of course. We know we hit those that resistance at 136 sort of 40 area. No real surprise there. You don't have to be an Einstein to work out that it was very strong resistance there, and it did the job, held up and gave us many opportunities to actually get in on the short. I get a lot of questions as to how would you trade that sort of thing. Well, when you know that there's a level there, you go to the smaller time frames, of course. You can go to the 1 hour or the 4 hour, and there you have it. Once you've got that touch of that level and you know the weakness is there, your first entry point is the 20 moving average pullback straight away. If you miss that one, you got the second one. Okay, it's really, really straightforward, and this is why I love the good technical setups, because they do give you an opportunity. You could go to a 15-minute chart, and you're going to see as many opportunities as you do on the 1 hour. So that's what you're looking for. You go to the smaller time frames and trade that period when you know you've got resistance there, and look for the first opportunity to get in. Okay, it's fast approaching the 20 moving average, very fast approaching, which is around that 134, 135 level, really. That's where it is currently at the moment. The moving average is all but there. It's had a very, very big move, and this is all, even if it did bounce from the 20 moving average, that's only a 23 pullback on the fib anyway. So no, it's pretty strong level really for it to potentially bounce off from. No surprise that it's here though, just prior to non-farms. If we find support at the 20 moving average and it starts to look long again, you see a series of higher highs and higher lows, the logical target's going to be to the 136 again, the resistance above. If it does, however, break the 20 moving average and it's trading down, and we see a series of lower highs and lower lows on a smaller time frame, I think the next point of call for this one is around that 134, probably 50 area, 40, 50 area. That's not a bad zone. I wouldn't be hell-bent on shorting this all the way down to the 133.50, because I think there's quite a bit of noise in between, but there is a good support zone at 134.50. So that would be the target if we break through there. I'll pop a line there. That's our target if we do get a break of that 20 moving average around that 134.40 to 50 area. But it needs to break the 20 moving average to do that, and we need to see a series of lower highs and lower lows. This is one of those ones where I could probably rather trade it up to the momentum, up to the upside. But, you know, we trade what we see, of course, and if it gives us a shorting opportunity, we'll take that after the 20. Okay, the US dollar yen has been really good as well. Look, it's been very, very technical. It made the new high only just, but then failed again fairly quickly. It's coming down and trying to touch that roll reversal zone. It is a good roll reversal zone. There's no question about that. If we do get support at this level here, long opportunities up to around that 146.50 area would be the first sort of trade I'd be looking for from a scalping opportunity. I wouldn't be going any longer than that until we get a confirmed day close above these levels. Until we get a day close above 147, I'm not going to be really interested in going any longer than this little period here, because this is showing a sign of weakness that it didn't quite maintain that power when it did go high. Okay, so the 20 moving average and a roll reversal zone is generally a powerful combination to stop a market moving anywhere. So I'm going to treat that with a fair bit of caution. If we get a daily close below both levels at around that 144.50, then we can start looking at opportunities down to the 143.30. But it's got a little bit of work to do before it does that. And my preferred trade in this instance would be the long. But again, I'd be looking at taking short opportunities at around that 146.50 area. That would be my long trade on that one. If we get a lightning bolt series of higher highs and higher lows anywhere in this zone. So like the other ones, at a very, very important zone prior to important news, but good trading again. Dollar index has shown strength where you expected it to show strength. It broke through a very important resistance zone, came back down and tested it from above. The 20 moving average has held it at bay, even though it tried to break through. It's pulled it up, and then we saw a good bullish candle move up from that level as well, which is good. It's what you like to see. Of course, that means weakness in the euro, so we will look at that euro in a second. But at the same time, it's found itself above that resistance zone again. So, yeah, no real surprise there, but that is a pretty strong candle off a very strong support zone. So that strength may well continue because it is trading above the resistance now. And while that 20 moving average is holding, I wouldn't be interested in any shorts on this. The Euro USD, of course, is the one that you would trade. And I've been saying it all week, really. Like we've been in a series of lower highs and lower lows for a long time. Even though we had this big impulse move up to the 20 and 50 moving average, it is still in a dead set prevailing downtrend. There's no question about that. So while that downtrend is in place, I'm not looking at long opportunities until this is trading above the 109.50, which means it has to get above the 20 and the 50 moving average, and it has to make that lightning bolt on the way up. Yeah, nothing short of that is going to convince me that we're going long on the euro. So while it's in this mode, look for shorting opportunities. The first instance is going to be down to the 107.80. That's going to be the easy trade, or the easier trade, because there's less in front of it. But it needs to lower high and lower low on a smaller time frame in order for that to happen, of course. So look for an opportunity on the lower high, lower low sequence to get it down to the 107.80. If it starts to trend up, though, I would not look at taking any longs until it does get above the 109.50. That is the condition on the euro, because it is still in a downtrend. There's no question about that. Until that changes, we're looking at shorting opportunities only with the right lightning bolt sequence on the smaller time frame. And the S&P 500, of course, look very flat sort of day. You can see it's had a very good run this week. Obviously, it's had a big run out of this double bottom. No worries about that. And having a relatively flat day prior is no real surprise. There is a little bit of resistance here too. You've had 7 or 8 candles here. You can see these daily candles right through here, all closed or opened, or at least touched this level at some point. The 4,500 level is a psychological level as well. They all touched this level very, very recently, so no real surprise to see it take a bit of a breather here. Again, a good non-farm payroll result. Well, when I say a good non-farm payroll result for the market, what the market anticipates is a good result. Doesn't necessarily align with what the Fed want, but if it's a good result for the market, I could see this breaking up and probably testing the 57.70 to 80 area relatively quickly. 4,600 is pretty much the high. That's a level you could aim for, but if you were scalping it, I'd be looking probably just a little bit lower than that, because it may sometimes run with the hype and then potentially pull back. I won't be looking longer than that, or a longer term view than that, until it actually breaks it with a daily candle. So we'll keep that in mind. But of course, if it starts to roll over from this point here and the news is a little bit soft and we start to see weakness in tonight's session, then we look for that smaller time frame change of trend, look for a series of lower highs and lower lows. And the first point of call is the 44.50 level here, which is this green line. Very obvious level for support. The 20 moving average is just above that too, so it could get there in a hurry. But they're the two zones that you'd be looking for. Basically a break up to the 46 or just under, and a break down to the 44.50, depending on which way it sways after the news results. So pretty relatively easy to spot. It's just a matter of waiting for which way it breaks. But just be prepared for probably pretty quiet trading for the next 12 to 15 hours until we get that result. I hope everyone's had a great week's trading. We've had some really, really good moves, and all the levels that we've been talking about for the last few weeks have been playing nice. So hopefully you've been able to take advantage of some of those. Just keep in mind that it might be a little bit quiet today until the volatility kicks in at New York Open with the results. And I look forward to seeing you all next week. Thanks, everyone.